Alrighty. Thursday, October 16th. And pretty wild day yesterday overall. Yeah, no doubt. ES was all over the place. We were all over the place yesterday, and it was kind of crazy. I mean, we rallied really hard, and then we sold off. It was kind of a nutty day. And then I see we're up 25 today. I see a bunch of earnings hitting this morning. There were some, we are in the earnings season. But it looks like JB Hunt, some of the pre-market movers, up 13%. UAL down. UAL. Las Vegas Sands up on broker action. I don't know what that's all about. Somebody upgraded it. Neo down. Lawsuit. I don't know what's going on with that. Neo. I don't even know how this place is even still in business, but CRM shares jumped 6% after announcing financial targets at investor conference. Whoopee-doo. Salesforce. This used to be a juggernaut. Around earnings times. CRM. Now it's not so much. It's been chopping around. And you can see on the year it's actually down a lot. This thing used to be a complete juggernaut. Now, I don't even know. Is anybody even really are they still using it? I assume so, I guess. But there's so much other competition now that the only way that some place like this can even grow is to buy other companies. They can't really grow organically. So that's pretty much it in the news. HPE slides 8.9% after issuing guidance. Hewlett Packard. Yeah. No, there. Things been on a tear though. Since the lows. That's a pretty big tear. I never really found that stock very interesting anyway. That's really all I'm seeing on the headlines. There's a bunch here that, I don't even know what the hell they are, to be honest. And that's about the size of it this morning. Again, didn't do much yesterday. We'll look at our. I did get down on some FXI. I did that. I did that calendar spread I talked about yesterday. So I usually do what I said. I try to do it. I mean, I don't really, I put the trades in. I mean, whether I get them executed, I did go get down on the JD as well. So I did that trade. Also, the J&J trade. That one's now. I think this is a pricing thing on the options. It really isn't anything because this is a calendar spread. And I don't think it's down $57 because when I looked yesterday, when the market closed, it was down about 15. So this is likely an options pricing thing, but I don't know. We'll see when the options open this morning. We'll see, but that one really went south fast. But I hope that's not the case. I think that's just more a pricing model. And then most of the other things, again, I'm getting beat up in Starbucks. I have to do something, and not that I have to do something in here, but I got to do something in here other than just this put spread. It's starting to come back. I mean, I'm slowly chewing into this loss. This loss was like almost $500. Now it's down to like $319. So I am kind of chipping away back at it. But Starbucks in general has just been such a lousy trade, and it's got me kind of questioning some things on the bullish side because I look and I see this dopey 7 brew joint opening up, and I don't see anybody at Starbucks. I mean, literally, Starbucks is dead. And I see this dopey 7 brew, and I see all these people, and I see them, it's fire. It's like, come on, it's the same shit. They're getting their ingredients from the same damn place. You know what I mean? Just because it's, because it's new, and they're giving away a ton of shit. They are giving away. I feel like they're giving away the farm over there. I mean, it's nuts. They're giving so much shit away. But I just got to put it in perspective. I just think, once the euphoria wears off over there, in 6 months, people are going to be screaming and yelling, oh, they raised their prices. And, look, they're not giving you as much. They're putting more ice in there. It's like, come on. I mean, that's just what happens, If you want good coffee, go to a mom and pop shop. Go to one of these micro coffeers, I guess. Don't. What are you going there for? You might as well. It's all made with the same crap. That's why I just laugh when people are like, "Oh, yeah," it's like, what do you think? They get their sugar juice any place different than the other 3-4 places out there? I don't know. It's people are just like sheep. I swear to God, they will absolutely buy anything if it's marketed right. It's kind of sad. Anyway, Starbucks, I don't know. I got to do something in here. Like I said, volatility in here is not, it's not, it's higher than it normally is, but it's not elevated to a level where I'm going to be comfortable selling any more options. But from a price perspective, I think it's in a good spot, but I thought it was in a good spot when it was 90 or 95. So that doesn't really say much, but, and you look at this, and I had it right down when it was 80 when it got down near 80 last time, it bounced and it had a nice rally up to 95. I mean, so that's kind of what I'm looking at here, and we're kind of getting the same sort of price action. And I put this alert on back in April, May, when I got long the first time. Now, my problem is I should have bailed out when I was ahead, and I didn't. I wanted to hang in there, like everybody does. But that's what I'm kind of looking at here, in that we are kind of bouncing back. Now, I do think they have earnings coming up too, which it kind of makes doing something end of the month, October 29th. So I'm likely going to hold off on doing anything on Starbucks. I'd like to see this volatility get up over 50 before earnings, and that will actually make this a juicier trade. And I'm likely at that point, so I'm going to hold off on Starbucks. Las Vegas Sands. Let's see. I've actually done pretty good in this one over time. Nice thing about this one usually is a good earnings play. They got earnings coming out next week. So we'll definitely put that one in the coffers. And if you look at volatility is kind of on the rise in this one. Another one I'd like to see get over 50 before I do something. Again, nice thing about this stock is it's relatively cheap. $50. It's pretty easy to do things in here. You kind of have a lot of strategies at your fingertips. Usually margin's pretty good on it. So you can do the strangles and, those sort of things because the margin is not crazy. But I'm going to hold off on that one too because they have earnings coming out. And I'm looking at, these are all the earnings. Because there's really, again, this is like all the reasons why I kind of packed it in doing the broadcasts for so long is because when the market just goes up, it sucks. It's boring. It's freaking boring. I can't stand it. It's like, what are we going to do? What are we going to get on here and tell people to do? Short, short Oracle or Palantir just for the sake of that. It's high, and then watching it go make another new high. Same thing. Short Netflix or Nvidia because, John Najarian said, or some jackass on, it's like, no, I'm not playing that game. And I never wanted to just come on and just like spew garbage just for the sake of getting followers. Not that I have that many anyway. So these are the earnings that are coming out in the upcoming days here. I have this ranked. So you want to see this up in Tasty Trade. You go to all earnings and then just sort it on when they come out. And you can see we really don't get into the meat of this. We've had some pretty decent ones so far. Like most of the banks have they usually always go first anyway. But next week's going to be the big kahunas. You're going to have the likes of, I see Tesla's on there. Looks like Valero, American Express, CSX, Coca-Cola, Lockheed Martin, Netflix, Procter & Gamble. So next week's going to be a lot better week, in my opinion, for earnings, just because the underlyings that are going to be reporting. I think Intel earnings should be very interesting this go around. You have a stock that has been really an absolute piece of garbage forever. Forever, it's been a piece of garbage. And I owned it forever, and I stuck with that stock. And, God, that had to be the worst experience for like a 10-year span. I mean, it was just the worst freaking stock on the planet. Anyway, talk about my overtime losers. But with this, you do have volatility elevating in here. It has made a nice rally from its lows. It's had a lot of headline news, with the government and all that other stuff, and the CEO being in the headlines, and the United States being investor and all that other stuff. And so I think this go around with the earnings, and you can see I'm sitting in 100 shares at $23. I bought it down there. I seen what was going on. I kind of tried to take advantage of it. I wish I would have bought 1,000 shares, but needless to say, that's where I sit with that. But I think earnings should be pretty interesting on Intel this go around. And likely I will, and it looks like it's next Thursday. Next Thursday, they announce. And I would probably, if I was going to do something in here, I would likely go to December and not do November. But, we'll see. We'll see what happens when that time comes. I mean, there is a lot of implied volatility in here, which is great. So, again, I think that one's going to be one that I'm going to be patiently waiting on. I really don't want to do anything now with it. This just hit. ABAT. What the hell is that? ABAT. I have no idea what that is. ABAT. American what? American Battery Technology? I never heard of them before. All right, so American Battery Technology is another one of these green energy scams. Absolutely. I wonder who's frickin'... I wonder whose politically connected cousin is the CEO of that scam. Wall Street Bets. What is this? Shares plunge following termination of something. Some kind of something. Termination of grant for lithium hydroxide project. Whatever that is. Blah, blah, blah. We're down pre-market Thursday after company said Wednesday that the U.S. Department of Energy terminated a grant related to 115.5 million lithium whatever. Under the grant, yeah, we know. Yeah, you got caught. It's like probably, what the frig are you guys doing? You know what I mean? Get lost. That's so funny. That is hilarious. And then you'll hear that. Oh, come on. Stop. This company probably, I guarantee if you go and look at the freaking board of directors, or there's somebody politically connected somewhere along the line. Somewhere. I mean, come on. That one, this doesn't smell right. What is this all about? Wall Street Bet stocks mixed. Whatever that means. Oklo. I know that one's been in the news. Taiwan Semi, NVIDIA, Advanced Micro, Amazon, American. When did all these become Wall Street Bet stocks? I mean, is that just like a stupid headline? I mean, Taiwan Semiconductors, a Wall Street Bet stock? Since when? Anyway, I don't know. Anyway, I know Oklo. I know that one's kind of been circulating. I don't have any. I don't have any thing in that one. I know that one's can going nuts. And I think that's a nuclear stock, right? Nuclear. Yeah, advanced fission power plants to provide clean and reliable and affordable energy. Yeah, sure, it's affordable. Yeah, right. I don't think it's affordable. You don't really care about it being affordable. You just care about being able to sell it to people. It's affordable. Yeah, right. Right. Anyway. Anyway. Yeah, this one's been nuts. What are the options? I'm sure that it's probably got high volatility. I don't know. I haven't looked at it. I try to stay away from this stuff because, if history's any indicator, from my own experience, I always wind up getting torched in these. these flyers. I always wind up getting torched, and then I'm like, why the hell did I do that? You know, why did I feel like I had to have something in one of these stocks? Like, why did I feel like I was missing something? And it's not like whether I was long or short. You know, it's like obviously it's probably it's on either side. I've tried to do both things, so it doesn't matter. I don't know. I mean, good volatility in here. I mean, if you look at the look at the volatility, it's actually definitely building in here. The thing's been just on a tear. I just don't know how you play this, really, because I'm not going to go and I wouldn't get long. You know, that's number one. I obviously wouldn't get long, but you kind of can't just get short either, because these things can run you into the ground. Because they will continue, they will be irrational longer than you are liquid. And I don't really know how I would play this, because I would play this to the downside, honestly, just from a pure price action perspective and volatility. And I'm sure the calls, like if I went into January, I'm sure the calls are so overpriced. I mean, look at the price of some of these calls in here. But look at this. Look at these spreads. Look at these spreads. $2 dollars. $2. Now, I would hope they tighten up. I doubt it. And the other thing I don't like is that where I kind of want to land here, I'd like to be up here. I'd like to be up here in the 240, 250 range. And they're 10 wide up there. And so that's going to be a big... What details have been sent? Oh, gee, thanks. Ugh, God. Tasty trade for you. Based on that, you know what kind of kills me about Tasty Trade, and nobody really calls it out. I guarantee they're using SQL Server in the background. And the reason why I know that is because they force you to reboot every night. And if they were using another database on the back end, they wouldn't have to reboot. And that's what they built Thinkorswim on. So I'm sure it's the same. I'm sure it's the same crap. Margins are pretty good in here, actually, surprisingly. But I like this trade. I like this January. I mean, if I'm going to do something in here, I kind of like this. I would like these spreads to be a little... I like these spreads to be a little better. Kind of like this trade, Oklo. Making me look at this. Bastards. Making me get involved. But this is what this one looks like. I mean, you have a lot of runway here. I don't even believe this is out. I don't even think it's at the two. It's not showing. Yeah, it doesn't even show where the standard. There's the first. That's one standard deviation on that side. It's not even past the first standard deviation. You know, there's just been so much volatility in this, so I guess that's why. But that's where I would land. I would land up near the 240, 250. I mean, even up there, even up at 240, 250, these are still showing like a 43 delta, which is just insane. It's just insane. It's insane. That's where I would land if I was going to be doing something. Because, again, it gives me some runway. I'm also going to be able to take advantage of this high volatility where if one of two things happen, it does nothing, right? You know, kind of have two things going for me with this trade. If it does nothing, but volatility collapses, right, I make money. If it goes down, I should make money. The only thing is if it goes up and volatility expands, right? I'm going to be hurting, but I do have a pretty nice runway, in my opinion, of to the upside. I would like to go out further, honestly, but it's just not available. You know, even if I went out to 260, you know, to me, 250, 260 to bring in a $1.30. Now I'm risking $800, $870, but I got a probability of profit of 81% here. And what's probably a real, you know, it's probably a little chunkier trade, but the back ratio, if you did a back ratio here and then change this, right? So the back ratio, you're going to do two contracts. So you're going to buy the front month and then sell two contracts on the back month. Now, that's a nice trade too, because that's bringing in $3,000. Problem is, though, is with this is you're using $5,000 worth of buying power on this. Let me make sure that that is right, because that is my trading account. Yeah. Yeah, that is right. Joint tenants with the right to survivorship. Joint tenants with her right to rape me for everything I own. Anyway, yeah. I mean, again, I don't know if I don't know. That doesn't really. I mean, good risk reward here, though, right? Max profit. You're not going to make no $3,000 though. That's one thing that's kind of messed up with these, with these ratios, is that if you look at this one, if you look at this on the curve, that max profit, and I can't pull it over. You could see that max profit gets skewed, and it gets skewed because if you literally hold on to this to expiration, and the price falls between your strikes, that's when you're going to basically realize the max profit, and that's not going to happen. More than likely, this is going to be your max. This is going to be the profit that you're going to live with, which is about $2,000. But still, that's a good risk reward. You know, you're risking $5,300 to make $2,000, and you know, likely you're going to close this, right? I'm not going to sit till expiration on this anyway. You know, this thing's up. Honestly, this thing's up 30%, and I'm going. Right, I make a couple of $100 out of this, and I'm history. Right, in a week or in a couple of weeks, and that's it. Problem is, that's a chunky trade. You know, to put $5,000, up. Not that you're going to lose the $5,000, but you got to put that $5,000 up in margin, and you're basically going to lock that capital up in this trade. I don't know if I'd really want to do that, but I like the looks of this. I mean, structurally. So if you have the money, to me, that's a really good trade. 87% pop, pretty decent runway, and you're out in January. I like it. But I like the other one better because that one's more my speed. So I might take a stab at that one. Why not? I don't have anything in this. Again, here I am saying I'm not going to get involved, and here I am, right, dicking around because it's in the it's in the headlines. But hey, you know what? That's what we do, right? When you're a trader, that's like, it's an addiction. There's nothing you can do. It is what it is. But that's kind of where I would sit with it. I would avoid. I think if I did a put spread, if you're overall. If you really are like bearish in this and think that it is going to just kind of hit the skids one day, you're going to have to do a calendar spread of some kind. And I really don't even want to go down there. So anyway, just a good old-fashioned call spread. And whether you do the 240, 250, 250 or 260, it doesn't really matter at all. It really matters on how much premium you want to bring in. I kind of like the 250, 260. You're going to bring in a $1.30. You're going to risk 870. You get an 80% pop, and you got till January to grind that one out. And that's where I would sit with that. And this is what this one looks like on the curve. God, I spent a lot of time on that. And I know there's a bunch of people that just don't understand when they say, oh, well, you put up 800 and you made 130 and right. If you did something else, Joe Blow from, bought some call options. Yeah, but you know what? The dude that bought the call options basically got lucky. Let's face it. He bought the call options, got lucky, and the stock went up. That's luck. Because he's got a 50. Me here, the stock can still go up in this trade, and you can still make money. That's the beauty of this, right? And that's why it's got a 81%. Now, look, if it goes south, you can lose 870. But if I bought a call spread, it's got to go up. I got no choice. It's got to go up if I buy a call spread. I mean, that's kind of the downside to buying an outright call spread. Now, if it didn't go up as much, if we were talking this was at 130, where it was a month or two ago, buying a call spread was probably the right idea. Because at that point, it hasn't really broke out. Here, you're talking about a stock that's kind of broken out already and been going ballistic. So, I don't want to pile on that. So, anyway, that's my trade. I mean, I can't really see anything else. Travelers, I don't trade that. What a lame session. And then, I'm likely going to, and I'm going to put this up because I'm likely going to trade some futures today. And the reason I'm saying that is I'm likely to look at a few spots, given if no headlines come out today. I kind of like this swing high up here at 67, 66.75. That if we get up there, and what I wanted to look at, and I wanted to bring up Active Trader because I usually have that in here. Do I have them on here? I'm not sure I do. I think I have them on the other, and I'm not going to trade them on Thinkorswim because Thinkorswim sucks for futures. I actually have it on TradingView. Let me see. Yeah, I don't really watch futures. Oh, here's what I wanted to see. I don't really trade futures on in fact, I haven't traded futures on Thinkorswim in forever. This has an R2 of 67.81. 67.81. So that is not that swing high. So anyway, that getting back to this swing high here, the 67. It was on that chart. I'll be all right. 67, 66, 75. I kind of like that as a short. And I'm going to just mark that. And so here's the deal with these. When I said, and I have had people say to me, look, it's all on how we get up there. Now, if we drive up to that level, fast and furious, it's pretty much off the table. Because I am not going to go and pile in the other way of a market that's kind of has momentum and is driving toward a price, because 9 times out of 10, it's going to blast through there, and anything that I was looking at pretty much goes off the table, because I have not calculated the amount of momentum the market has at that time when I put that level up there. It was basically purely price action, all this other. So if we go up there and we kind of methodically kind of grind up there, in the morning, we grind up another 20 points in the morning, and we get up there fairly I would say orderly, then that trade really, really presents itself as a great short, because chances are then it's not going to have the momentum and the volume to kind of plow through that. And so that's the way you have to look at those. And so I would be looking to short the ES up there. Don't go and take that and say, oh, I'm going to do it with the SPY. It's not going to work. It doesn't work. Futures trade completely differently than the cash market. Completely different animal. You're not going to be able to do it with options because, look, when I'm trading futures, I'm looking at ticks, right? So I'm looking at like a 20 tick reversal, 20 to 30 tick reversal off that level, and then I'm out. I'm gone. It's a quick hit. It's a day trade. And if I'm in that trade more than, 20 minutes, I'm going to be mad because I'm looking for it to get up there, back off 20 or 30 ticks, and then have a nice day. Go to lunch or whatever. So anyway, that's how those work. And then you could do it in the ES or the MES. So you can even use the micros. And a lot of times I likely do both, right? I'll do, excuse me, I'll do both. I'll do the MES and the ES. Wow, it's really having a problem, huh? But this is the new active trader, if it ever comes up. This is the new active trader on a Tasty Trade, which I kind of like. I've been using it a bit, and I kind of like it. I'm getting used to it. If I were to have a wish list on this, I wish you could actually, I wish you could take this window and and take it out and take it out of the app and just make it a standalone. The fact that it's kind of built in here is kind of an issue I have. It'd be nice if you could just take this window and take it out like you can in Thinkorswim. You can actually pull the windows out. That would be a nice feature to have. I have to believe they're probably looking at doing that at some point. But you could even use the MES, which is the micro futures here. All right, and that's it. That's all I got. There ain't much else. Honestly, there's just, we just keep grinding. We're grinding and grinding. I mean, typical October, right? Volatility's still near 20. And then I can't probably conclude without couple things. Gold, another new high. 42.64, another new high on gold. Which means what? Another new high on silver. But surprisingly, copper just really hasn't kept pace. And that's a pretty interesting story there. The AI build out is pushing copper prices, which makes sense, right? Anyone familiar with electricity, right? It all runs on copper. So you kind of have that going on as well. And then, I don't really talk too much about it, but the Russell has been kind of, out of all the markets, the Russell seems to have new life. And whether or not that's sustainable or not remains to be seen. But the Russell seems to have kind of be back. And that's, comprised of a bunch of small stocks, which I don't really trade those much. Anyway, kind of had to say that. Still no position. I mean, what are you going to do in gold? Just go long, I guess, right? Go long, gold and silver, and then just, don't look in the rearview mirror and just close your eyes and go long. I mean, I don't know what else to say. I've tried to short it a few times. You get, and I'm doing small little trades, folks. I'm not going crazy with that. I mean, the way to me for you to play, this gold trade, and I've said it before, is to use the ETFs, the GLD or the SLV. They're very liquid. They got a lot of interest, and do some options. Long or calls or puts doesn't matter. The nice thing about this is that this has pretty liquid strikes, and you can see, and they're adding they're adding strikes all the time. But you can do small trades in here and not kill yourself and not have to risk a lot of money. I mean, there's you want to get a bullish trade. Here's a 385, 390, basically 50-50 shot. Don't do it on a day where we're up. We're up what today in gold? Another 50 handles. Don't do it on a day we're up 50 handles. Maybe perhaps when we get one of those days that are far and few between where we kind of sell off. Yeah, maybe get down on a little call spread. But these are the kind of trades that are not going to kill you if gold decides to kind of go on a skid for a couple of weeks. That's really the only way to play it. I mean, because to me, to just go long here, even here, and I've been saying it for a while now as it continues to make new highs. I mean, at some point, there's going to be that point where, all right, it's just not going to go up anymore as fast. It's going to kind of run out of steam. But that time is not now, and I don't know when that's going to happen. So, to me, that's the easiest way to play it. And that's why I actually play around when I try and get short. I play around in the weeklies. You can see I have these expire tomorrow. They're going to expire worthless. But it was like a $50 trade. And the nice thing about some of these weeklies, like even if I go out like next week, for example, they dollar-wide strikes. So if you want to play a little bit in here in gold and you don't have a lot of money, you can do one of these little baby trades like this, and it's like $50. And it's almost like betting on a it's like betting on a baseball or football game at that point. And they're short term. And for $40 or $50, a trip to the freaking McDonald's these days, you can try it and do that 100 times. You know what I mean? And so anyway, I mean, just to me, that's the only way to really play this. Because to go and outwardly just get long here, you got to do it on the dips if you're going to do it. And anyway, that's it. That's all I got. I'm out of steam. I'm blabbering. And so have a good one. Just the one trade today, Oklo. Maybe a possible, short trade in the ES today, sometime this afternoon. And then bunch of suggestions on the GLD, SLV, do those weekly options, get short, get long, and kind of play around in there if you really want to kind of take advantage of that market. That's kind of the place to be if you're going to do it, in my opinion. So anyway, have a good one.